Well, Greece really managing to upset the apple cart over in the EU and taking the markets on what was an emotional roller coaster ride since the resolutions were tabled last week. I mean, how are you reading the kind of headlines that have been filtering through?
Yeah, look, we definitely don't think it's over. I mean, I think Europe's a mess, and I think it's going to take many years for them to sort it out. So even if Greece gets kicked out of the euro or has its referendum or whatever and agrees to keep the government, who cares? I mean, I'm not actually sure the market at this point genuinely cares longer term. You know, I don't think it's going to matter. I think what matters is how does Europe get out of way too much debt? Yeah. You know, you can't just pass the debt can around and hope that someone eventually has deep enough pockets to pay for it. At some point, you're going to have to take your medicine.
So let's take a look at what Europe's deleveraging, is actually affecting here and what it actually means for a market like ours.
Sure. Look, I think, I mean, our numbers are that the European banks alone have to shed about 2 trillion euros worth of assets over the next 2 years. Because their regulator is going to say your balance sheets are too big, you're going to take down the country like Switzerland, UBS, Credit Suisse, too big. So please get rid of a lot of your balance sheet. Now, the problem is there's no buyer of $2 trillion worth of assets. So, I mean, therefore, the only way you, if you like, clear those assets into the market is to mark down the price of them. Okay, so I think it's going to place downward pressure on asset prices for a long time. I think what's interesting about emerging markets, and not a lot of people actually make this connection, interestingly, because there's as many people who will say EM will decouple from DM, so EM's fine, don't worry about Europe. But actually we think that, and we also kind of have 2 people in our firm, one who says EM's great, which is Jonathan Garner, and you should back EM, and the other guys in Europe are saying, hang on, have you spotted the link between Europe and emerging markets?
Absolutely, because it seems that decoupling theory has lost some momentum over the recent past.
Yeah, and I actually think what's quite interesting is the rand. So if you think about this 2 trillion euros of assets that DM banks, European banks, need to shed, 500 billion of that is emerging market exposure. So now as European banks shrink their balance sheets, they have to sell potentially emerging market assets. That's going to put pressure on emerging market currencies. And it's interesting to me that, right up until the last week, the rand was almost perfectly correlated with global stock markets. Yeah. Markets went down, rand weakened, markets went up, rand strengthened. The rand hasn't really strengthened, despite a near 20% rally in the equity markets. And I just wonder if you're starting to see some signs of these big savings pools sitting inside European banks saying, you know what, we need to start shrinking our emerging market exposure because our regulator is telling us we need to have smaller balance sheets in 2 years' time.
As an investor sitting within an emerging market then, I mean, how do you play the markets? Do you see this as a buying opportunity?
Well, not at the moment. I mean, we think the markets run a bit hard, so we would be sitting out. I mean, we actually think the best way, to be honest, is just to try and get yourself away from the noise. I mean, we run a trading desk. We find it impossible to time these markets. So if you look at hedge fund returns year to date, particularly globally, most of them are down. None of them are getting the timing of buy on the dips and sell at the peaks. And so rather just, if particularly retail investors, just get out of that noise and focus. Like what we're trying to do now is our research teams are writing much more about, let's focus on the good business models that are going to endure an economic up or down over the next 5 years. Yeah. And actually there's no major valuation anomaly in the market, so it's not like you can take big advantage of beaten up stocks. So say valuation is normalized everywhere in equities, then rather buy the good businesses.
In fact, this morning we were having a discussion about looking towards companies that offer income certainties, where you've got that dividend yield, you've got that earnings visibility, you've got strong dividend policies that would be supported because of the potential earnings moving down the line. So are those the kind of companies you're looking at?
Yeah, we actually came up with a list yesterday. It's called the 15 for 2015. And it's a list of 15 stocks in the whole of emerging markets in central time zones, so Russia, Middle East, Africa, South Africa, and Central Europe. And we've got 4 South African stocks in there.
Okay, let's take a look at them.
Mr. Price.
Yep.
So good, story there, still a young company, growing nicely, stable, starting to pay a decent dividend. First Rand, okay, slightly biased there, obviously, part of my shareholder, but again, also, got some positive momentum in the banking sector. It's doing some specifically good things on its own and very capital flush, unlike other banks. Paid a special dividend, likely to pay a nice dividend going forward. Life Healthcare, defensive growth company, listed fairly recently, but also now generating lots of cash and is going to increase its dividend payout ratio.
Let's just, before you go into the fourth one, Life Healthcare is an interesting one because it's got exposure to the South African market alone, as opposed to, the likes of your Netcare and your Mediclinic, which has that offshore exposure, and it's still being priced the same as those. So why is that? Is it because of the potential that we're looking at down the line for Life Healthcare venturing into offshore territories?
No, I don't think so. I mean, I think there's, I think South African companies, South African equities can trade at the same multiples as offshore companies. Definitely. I mean, the growth rate here for Life Healthcare, I think, is better than the growth rate for Netcare's UK operation or Mediclinic's Swiss operation.
So the investment case here largely based on the fact that it is a South African operation.
Yeah, and to be honest, particularly in the case of Netcare, there's lots of debt in that entity. Okay, the share hasn't been a good performer, so now may be a decent time to pick it up. But if you just look at quality and risk, Life Healthcare, much easier to analyze, one country, growing nicely, no debt, can pay a dividend. Netcare, maybe more upside, but you're taking a big punt on the turnaround of a UK National Health Service business.
Okay, let's move on to the fourth.
The fourth is Vodacom. Slightly controversial because, technology and telco industries do move quickly. Often hard to back a technology company for 5 years because you just don't know, maybe Telkom gets it right in voice and data, mobile, and so they take lots of market share from Vodacom. We don't think that's the case. We think Vodacom's well positioned, particularly for data. Data is the new trend in mobile. And again, very cash generative. And paying a nice dividend, pay about 80% of the earnings out as a dividend. Again,
very much in South Africa though, as opposed to MTN, which has succeeded in enhancing its African footprint very aggressively, and something that Vodacom has pretty much fallen off the wagon with.
Yeah, I think so, but it doesn't mean that South Africa's ex-growth everywhere. I do think there are lots of opportunities in healthcare, for Life Healthcare, for example, to grow under the NHI as a private hospital company. There's lots of opportunity for Vodacom in the South African market to increase data penetration, and it can be a big driver of its earnings. Yeah. So, we don't need to get romanced necessarily by South African companies only having growth prospects if they go overseas. To be honest, if I was a South African asset manager, I would choose good South African companies that have got good local presence. And if I want offshore exposure, maybe I need to go and hunt for those shares in the LSE or listed in New York, or the Unilevers and the Procter & Gamble's that have proper emerging market footprint, not just a single country exposure, maybe like MTN might have in Nigeria.
Yeah, you highlighted a little earlier that Africa as well, there are a few stocks that come out of Africa. Could you give us a hint as to one or two of those that sit in your portfolio there with regards to those stocks you're looking forward to 2015?
Yeah, we don't have any African companies in that list.
So it's South Africa primarily?
Yeah, we looked at Africa, but none of them cut it, if you like, on the metrics that we use to rank these companies. In Africa, we like the Nigerian food stocks, but they're not exactly cheap. So, and it's not easy to get good size if you're a big asset manager in those companies. But there is obviously a fundamental story there with the emerging Nigerian consumer that we like.